welcome to Nifnex TV. And what we do with Nifnex TV is obviously address the issues that small business owners face. The issue that we've got that we're addressing today is how to attract investors and crowdfunding as well. This is a new thing. It's not that new, but although it's a digital platform, and we've got a great panel here discussing that. We've got Jamie talking about the pros and cons of investments and getting investors on board. We've got Sue, who's going to talk about the benefits of putting a proposal together and how it should look like and the principles behind it. We've got Rajab, who's going to talk all about crowdfunding on the online platform. So welcome the panel and welcome audience. So let's get started by getting Jamie to introduce himself, and we'll move forward.
Okay, I'm Jamie Vine, the CEO of Liberty Executive Offices. So we provide serviced offices, virtual offices, and meeting rooms in Perth CBD.
Fantastic. Sue?
I'm Sue Findlay. I have my own business called BidBuddy, and I help small to medium-sized businesses win more business through bidding for work.
And I'm Rajab Karume. I'm the director for Needle and Hay Digital. So basically what we do at Needle and Hay is we help businesses transition their business models into the current environment, what I call the reality of the 21st century economy and social platforms.
This was a great topic in that case for you as well, Rajab. Can we start off with Jamie? It's a big decision sometimes to get investors on board, although having said that, cash flow is king. Yeah. And at the same time, what are the pros and cons from your perspective of getting investors?
Well, from my perspective, I'll speak personally about my situation. There are pros and cons in terms of you give away an element of control, and you still to a certain extent have a boss when you bring in investors. But it wasn't really a decision or a choice for me, because the amount of funding I needed to get Liberty off the ground, it was way outside my personal reach. So it was a necessity.
Okay, tell us more about it, if you could.
Yeah, of course. I mean, I think the process that I went through, and having spoken, years later to the shareholders about why they invested, to get their perspective on what they received, what they were looking for from me and from the actual document that I issued. They wanted, first of all, a record of success, a track record in the field that I was looking to get into, which obviously I could demonstrate at the time. So they know you've got some credibility, some experience to fall back on. You understand the business model, you understand how to make it work, and therefore you're less risky than somebody who just thinks that's a great idea, I'll give that a go.
Yeah, true.
So that was the first thing. So I had to demonstrate my pedigree, if you like. It's a good word. From that point on, it came down to market research and market positioning. So to say, look, this is the market I want to enter. This is what's happening in that market. This is how we will differentiate in that market. And this is what the market could be with Liberty involved. So, to really identify where we would fit in that market. Are we going to compete directly with that person, all those people? Which part of the market? Because more often than not, certainly in my business, there are different levels within the market, and I'm sure that's similar throughout most markets. So we had to decide on our market position. So we then had to do that entire research piece around market demand, as well as what the actual supply looked like. So it's all well and good understanding what your competitors look like, but you need to understand the likely volume of inquiries, where you're going to get your inquiries from, and especially for me, I was new to Perth and new to Australia at the time, so I had to work all that out as well at the same time. And then I guess the other thing that really secured my funding was the level of financial due diligence that we did, and the quality of our financial modelling. It was an old model that we'd worked on for a long time, so it wasn't a new model we created for this business, but it went into a lot of detail. It covered the cost down to every single cent. It explained every single assumption, and I guess the driving force I guess the thing that sealed it completely was just understanding the sensitivities within that model.
Yeah.
So we had a table right at the back that said, look, we've told you we will operate at this much per workstation, at this occupancy, at maturity, and this is what it produces. We then came up with a table that said that if rate goes north or south and occupancy goes north or south, this is what happens, and you could see the red zone very clearly. So you knew that you had to do really quite badly to lose money, and there was a lot of upside beyond what I was saying we were forecasting.
Yeah.
So it just gave people the idea of what the potential was of the business. And then really the last point was for us, and what attracted my investors was the growth story and the exit strategy. So
Yes. So they need to know
they
what's
want
gonna
to be, they're in it for a return.
Yeah.
They're not just in it for an annual dividend, that they want to see a plan, and they want to see, and then they're part of something that's growing.
Yeah.
And obviously I can only speak for the people I dealt with. Other investors might have a different criteria,
True.
but certainly the ones I dealt with, that's what they were after.
Speaking about the document that you put together,
Yep.
Sue, could you address what are the principles behind actually getting pitching for your business from investors or the like of that?
So the principles for a sales document is the same, whatever the product and whatever the sales purpose is. So whether you are pitching yourself to win a job, or you're pitching your product to win some work with a company, or if you're pitching your business idea to an investor to win some funding, the principles are the same from a psychological and a neuromarketing perspective. So the first thing is you need to understand very well is your product, because you can't sell it if you don't understand its strengths, its weaknesses. Jamie talked about the areas and the sensitivities. So you need to have a very clear idea about what business problem that product solves, because unless there's a problem that it solves, then no one's going to be interested in buying the solution. You've developed a solution looking for a problem. So the other aspect that you need to understand very clearly is what your market is looking for, and that varies depending on the nature of the sale. So in the case of pitching your business idea to an investor, you need to be real clear about what they're looking for, and what they are looking for is not a technically beautiful solution. That is the vehicle. What they're looking for is to make money, and to make money in a relatively short term, and to have a very low risk framework around it, so the return of that money and the guarantee of them achieving that return is there. So the risk of failure is very low. Now, startups, in the IT startup community, it's an area that I'm working in at the moment as the chair of the Insight Awards, the ICT Awards of WA. The startup community, angel investors work on like a 1 in 10 success rate, and that's because IT startups are quite difficult to bring over the line. So you need to understand, first of all, they're looking to make money, and the means of making money is less important. So whilst you're in love with your product, don't sell your product to them. Sell the benefits, the financial benefits of getting that product over the line. You've got like a minute to get their attention in the first place. So you need to be very crisp about your business, your proposition. You need an elevator pitch. And that elevator pitch can take months to develop. And you need to test it over and over again, because what you're looking for is you need to grab their attention, and you need to excite them in a minute or less, and you need to get them to the point where they want to hear more. And if you get to the second meeting, then you've got around about half an hour, and if you haven't aroused their attention and interest within the first 5 minutes, then they'll move on, either mentally or physically. They will move on, because they hear so many fabulous business ideas. They're looking for the one. So that your opening gambit is really very, very important. So how do you make that opening gambit the most interesting, that grabs their attention and grabs their, yes, I want to hear more, and anchors them to the spot so they listen to the rest of the presentation? You're looking to arouse interest and excitement. So the best way to do that is to generate some emotion in them around the problem and the fact that this is a big problem. Doesn't matter what it is, it's got to be a big problem, and you have obviously developed the solution to the problem. So you need to pitch the problems in numbers, dollars and percentages. So you put some tangible figures around the size of that problem. So the problem may well be that 20% of small businesses don't have access to adequate financial planning information. Now, that in itself is interesting. But what you next need to do is turn the dial up on that problem and amplify it so that it becomes a problem that your solution seems like an obvious solution. If anyone's had a crown, if they've ever been to a dentist and been sold a crown, you'll know exactly what I mean. So the problem is when they first tap on that tooth and you know that it's a bit sore, and they're talking about, oh, there's a problem here. And then what they do is they whip out the liquid nitrogen and they whack it on the tooth and they amplify your problem for you. That's what I'm talking about. While they're peeling you off the ceiling, they're then talking about a $2,500 crown. And by that stage, you'll pay anything to be out of that pain. So that's the principle behind successful persuasive pitching, is you have a problem, you amplify the problem, you present them the solution, and from that process, the cash register will be going off in the background, because they will see intuitively that this has a big market. So if you can demonstrate, again, in a very crisp and clear and tangible way, the size of your market, then they can see that the solution is a winner. Now, around that is the credibility framework that Jamie talked about. So it's not enough to say there's 2,500 small businesses in Australia, and if we can get 1% of that market, then that means this much money. Because what you haven't demonstrated in that statement is that 1% of the market may not even be interested. So you have to show them through the problem framework that there will be people that are interested, so that the 1% then sounds like a credible claim on the size of the addressable market. What helps though is evidence that you have tested the market. So you've built a straw man or a pilot and you've implemented it, or you've done a survey, a massive survey, the bigger the better. So somehow you need to demonstrate that not only is this a possibility, but it's a probability demonstrated by the level of due diligence that you've done and the market testing that you've done, which you obviously did. You explained that very well. And so the more credible the opportunity, then the more interested they'll become. And then lastly, to completely mitigate their risk, you need a good business plan and you need sound numbers. You need to do models. Jamie's talked about that. Again, that's not a quick process. So you can't sit down and write a 30 to 1 second to 1 minute elevator pitch and pull together a business case in a month. That's pushing it. This is a fairly large piece of work that you do, and the more work that you do, the more evidence and data you're going to accumulate. So again, the more in love with your product you're going to get, but the hardest bit at the end is then distilling that down to a very short document. Because as I said, when you give them the pitch, you've got half an hour and you need to leave 10-15 minutes for questions. So you've really got 15 minutes to present the problem, amplify the problem, present the solution, frame it in an addressable market, and with a fairly high probability revenue stream, and then sell them on the idea.
Well, I'm selling on the idea. I mean, I guess the way you project yourself and the way you sort of present makes a big difference. And I guess speaking about IT side of it, a lot of them are geeky. I mean, I'm sorry to use the word geeky, but how do you present a solution or present the problem, so to speak? Because not everyone's going to have the right personality to say, hey, I need the money and this is what the potential is. Can you get another person to pitch it for you, or does usually the founder or the CEO of the organization do it?
I tell you what, passion sells. So if you're passionate about your product, it doesn't actually matter what your product is. If you're really passionate about it, then that has a subconscious influencer on your audience. So if you've got a geek who is of the pale basement type, then you don't want to put them in front of the investor, because it's very unlikely that they will show that. I mean, I'm generalising here, but you don't want someone who's just a matter of fact about the fabulous thing, that the idea or the fabulous product that they've built. You need someone who's so in love with it, but if you can't pull them out of the detail and up to the business numbers, then you need someone to back them up who can do that. So they pitch the idea, the problem, and generate the feeling around it, and then someone comes in and takes care of the business details.
Speaking of the business details and taking to the new, or opening it up completely, comes crowdfunding. Tell us about crowdfunding, and tell us, Rajab, just how does it actually work? I mean, I know we're opening it up not to just investors directly putting a proposal together, but now you're saying, well, this is the idea, put some money in. Is that what it is?
Basically, at the moment, over the last decade or so, crowdfunding is sort of a newbie in the financing avenue. So basically, crowdfunding does not replace current channels that you have for financing. Typically, startup businesses would bootstrap. That would mean they would take money from what they have in regards to their own finances. They would borrow from their family and friends, and then be able to scale up from there. What crowdfunding does, it provides an alternative avenue to what's already existing. Now, the reason I think for the growth of crowdfunding has been basically the ubiquitous mobile devices, the interconnectivity between people around the globe, so that an idea can be shared in a flash of a moment across a large pool of people, and you'd get feedback. So as you mentioned earlier, you need to get some research. Typically, prior to the current environment we're in, digital, if I could call it, you'd have to do your normal market research. You'd have a focus group, and that would take a relatively longer period of time. However, now that you have social platforms, it is relatively easier and much more faster to get an opinion from the potential market, because there's two things in regards to when you're doing a pitch, for example, regarding the potential you have, because it is a potential. You can say, I have a potential for a solution to a problem, as you frame it as perfectly as you would like, but that's a problem you framed. Now, the feedback from the target market is critical, because it can be fleeting. If you get a call for a survey and say, if you were to use, say, a new phone device and it would save you 10% across the board in your bills, you'd say, oh, that's fantastic, until you receive it and realize it's clunkier, doesn't do what you wanted it to do. So the 10% savings gets negated. Now, if you were pitching in regards to that, and it would make a logical assumption that pricing is a significant factor. But then once you deliver the product, you realize that the underlying requirement for your market base is a bit different. So in the social media platforms we have today, it allows for that immediate feedback, which is fantastic. So this is where crowdfunding, I think, has become popular. Businesses have realized that it is much easier and it's much more palatable for you to be able to present products to the market that the market has given you prior feedback. And we're mentioning ICT here. I've got a digital business. But what I say in the ICT, the agility about running a product to market. A lot of software companies do that a lot. They get you to test a product before it's fully launched. What they're doing is they're getting feedback from you. So Windows could say, here's Windows 9, have a play around it, let us know what you think, what you like, what you don't like. What you don't realize is they're taking that feedback and incorporating it. And it's a live, if I could call it live feedback, which is fantastic. So now you have crowdfunding as a platform to raise awareness, one, for the potential that you're asking, engage with the community, because I like saying that businesses do not work in vacuums. And what I mean by that is you can frame everything in a business plan and within the confines of what you'd call a business environment, and then you go out to the society or the community and realize there's a few disconnects. There could be a social disconnect, there could be an economical disconnect. So crowdfunding allows you to do that testing, because you've got all the participants, you've got the investors on one side, and you've got the entrepreneurs or businesses on the other side sitting on one platform. So in a nutshell, how I would describe crowdfunding is you've got three elements to it. You have the funders, which are the crowd, and on end, so general public, if I'd call it, or retail end of the market. And on one end, at the other end rather, you have the business owners or the entrepreneurs who have a concept idea. It could not be a startup, it could be away from the startup space. It could be someone who wants to who already has a very successful business, but they need to move it from the level they are in to the next level. And they have sort of limitations. We all know 70% of employees in Australia, for example, using the Australian Bureau of Statistics figures, 7% of the employees, private employees, are within the SME business. And we also know, anecdotally and from research, that small to medium enterprises usually have a bit of a difficulty in regards to moving from, say, one stage into the expansion stage due to the capacity for private sources of funding. So typically, you'd start a business, you'd use your own funds, and then you'd think, okay, I need to move this business, I need to have $1 million machinery, for example. You'd go to the bank, the question, for example, would be, how many times can you leverage your house on this, if you reach a maximum?
The bank says no.
They say maybe look at other avenues. Then you've got venture capitalists, so you'd go to a venture capitalist and have a discussion in regards to that. So that's on one part, in terms of business. In the middle, you have the platform that the crowdfunding entity would use. So all these three would come together and it would make it easier. So it's not replacing any avenues, it's just augmenting.
Yeah.
That's a good point.
As an investor in that scenario,
Yes.
rather than the entrepreneur, is your relationship with that business entirely virtual?
It doesn't necessarily have to be, because crowdfunding is a sort of, if we could call it the umbrella term. Within that, you've got a number of streams, if I could call them. It could be an equity-based crowdfunding. So as an investor, you could put some money into a project that requires some capital. So let's say, for example, we're having a discussion earlier about the kid who wanted potato salads, So you might want to say, for example, $500,000 million. You as the investor believe in the project. You're able to put as much as you wanted. You get an equity based on that. Now, that's one way on the equity side.
Expensive potato salad.
Exactly right.
The story behind that is quite interesting because it talks about, it highlights how emotion can really carry the day when you're pitching an idea. It was a joke. He posted on Kickstarter that he wanted to make a potato salad. And he wanted it to be the best potato salad, so he wanted $8 to buy some ingredients. Now, Kickstarter then says, okay, so you can invest this much, or that much, but what are you going to give back to those investors? And what drove it was the top amount of donation or investment had some aspect of potato salad given back, and then there were stretch targets that made if he exceeded that value, then he would make a potato salad for a homeless person. And $80,000 later, he's making a lot of potato salad for homeless people. And because people kind of bought into the whole, oh, okay, well, look, if you make more, then we'll feed homeless. And so this kid who posted a joke and wanted to make potato salad is now hosting a grand gala banquet for homeless people.
What is the investment again? Sorry, the top investment?
Oh, it was $1.
$1.
Yeah, because his target was
80,000
8.
people.
Yes, they all bought into the homelessness, which had nothing to do with his product, and that's what I was saying before.
Yes. So there's a number of, as I said, there's the equity base. So you provide some investments and get some equity from that business.
Yeah.
It could be contribution based. So it'd be a social agenda that someone wants to get involved in. So there's no financial
Like
return,
not-for-profit.
fiduciary responsibility on the person putting the project up into the platform. It could be reward based. I'm looking at creating something, so typically to that child, where you get a prototype coming your way. So it doesn't have to be financial. So it's a social and economical based type of engagement between the entrepreneur and the funders.
Okay.
Yes.
So if I was writing a book
Yes.
on entrepreneurship, I could put that up on crowdfunding and said, put some money in. This is how much it's going to cost me to get this book off the ground.
That's right.
And your investment of $20 would also get your book as well. So I could pretty much do that as a project.
That's correct. Yeah. So it's sort of a reward-based type of crowdfunding. So that's not equity-based. So
Correct.
you're not saying I'll write this book and then you'll get a share into my company. So when the final numbers come out in terms of distribution, then you're a shareholder. This is more, I'd like some help. And you're putting it out to the world, as I said. Well, we're now in an age of significant interconnectivity. So the commonality aspects of what drives, us individually can easily be grouped because you've got that visibility. So crowdfunding is very much in its time. You're not saying I'll not be able to go to, for example, the bank or venture capitalist or other types of funding. You're saying I have a platform here, right here next to me. I'm in the bar sitting there having a look, and I can have an engagement and get a bit of a feel for what people would want to. So I could take it either through to the equity side, or I could make it more a social project, if I could call it that.
Yeah.
Yes.
You can basically give back whatever you want, can't you? You set those attributes in the
That's correct. So
platform.
you choose the platform that you want to engage in. So if it's more of a social base without the equity involved, you'll go more to a social based type of crowdfunding platform. If it's more of an equity based type of engagement, then you go to an equity based type of crowdfunding platform.
Yeah,
That's correct.
I did have a couple of questions for Sue and for Jamie about how do you find angel investors, because I know you sort of deal with that on a regular basis. But before that, Jamie, you must come across crowdfunding and investments a lot from Liberty itself, from the people, the businesses who operate from there.
I think we don't get a lot of exposure to it because by the time they get to us, they've already been funded. So I think that's more maybe in the co-working type of environment. But yeah, we certainly see businesses that come to us with that they demonstrate their grand plan to us when they take their one-person office with a view that they actually want to move to that 8-person with river views within a year. And we watch those businesses develop. And actually, what we try to do as a business is one of our core values is to provide an environment where businesses flourish. That's what we say. So we're trying our best to remove all the distractions that come with running an office so that the entrepreneur or the business can focus on their growth and focus on their business. And there's no better feeling for us to see clients grow from office to office to office, because it's not just a growth in our income, it actually feels like we've helped them achieve that along the way, and it's quite satisfying.
In which case, now if you sort of address the topic of how do you get angel investors, how do you go about finding investors in that case? That's where you can actually pitch.
So there is the Angel Investors Group in Australia. There's a chapter in each state, and they run regular, not awards, competitions if you like, where they open up and you can put your ideas in. You've got so many words to pitch your idea, they review those, and it's a formal process. They're also part of OZAPS, the OZAPS Award, and the OZAPS Awards is again where they're open once a year. There's a $400,000 in-kind prize. I think that's right, don't quote me. And you can post your business idea, and if you get shortlisted, then you get an opportunity to pitch in front of a panel of investors. And if you win, then you get sponsorship and mentoring, and as well as financial assistance and so on. So angel investors are looking for that sweet spot between $200,000 and $500,000, but they also want to help the business grow as well. So they want to be actively involved in mentoring and coaching.
Yeah.
So that's a specific group that's been established to support innovation and entrepreneurship in Australia. And I'm sure there's others like that.
Yeah.
That's just the one that I'm familiar with. And as I said, they have a process where they invite people to pitch to them.
In the crowdfunding space, I'm involved with a relatively new crowdfunding platform in Australia. It's called FatHen. We had a soft launch. FatHen.vc, yes. So we had a soft launch last week. So we're also looking in that space in regards to being able to help businesses that have a need for capital and match them with the investors. What we're going to be doing significantly different is that we're going to be putting some rigor in regards to the businesses that come across. So, for example, you've got an investor, you've got a businessman or a woman, or you've got an entrepreneur who would like to have, say, raise 500,000. Then they come through to the FatHen platform. We would do the due diligence before we put it out to the public. So we would make sure that they do exist as an entity. What the claims they're making are actually genuine. So it's not just a random. So that by the time we post it onto our platform, all the member investors can have some confidence that we do have some due diligence undertaken. So it's not just someone with an idea that will disappear, for example. And secondly, as the platform owners, what we do is then we may get involved, as you suggested, in regards to the companies that come across where we see there's a need in regards to the managerial or corporate type of structure and guidance, so that we put our name reputation out in the line here. So we need to be able to make sure that there's longevity with that project, so that we can keep getting them on board.
So, before we go into, I think it's almost time to wrap up and go Q&A. But Jamie, could you share the steps that you took to get investment to start with for yourself?
Yeah, absolutely. Well, the first thing I did, because like I say, the volume of funds I needed was quite large. So I initially prepared the plan that I talked about earlier. I then went to see accountants, lawyers, like corporate ones, not just somebody around the corner. So I was seeing big practice lawyers and accountants to structure the business properly, and then let them test my model and make sure that when it got into a due diligence stage with any investors, it wasn't going to break.
So let them pick on it first.
Yeah, so let them try and pull it apart, and then also from a compliance and protection, self-protection point of view, made sure I had a disclaimer, a professionally written disclaimer on the document, etc., and that the returns on there it was all done properly. So once I'd got that together, I literally, during those meetings, asked the lawyer, asked the accountant, who do you know? And it was literally word of mouth, and I had meeting upon meeting until I eventually got the funding together, and it took me 13 investors to get the amount of money I needed.
And how long, time-wise?
Emotionally, it took about 3 months. 3 months from from getting verbal agreement, it was a further 4 months to getting signatures on a shareholder agreement. And immediately upon that, the funds arrived.
So was that from beginning to end though, when you first had your idea and you started working?
No, so from the end of the plan being finished,
Mm-hmm.
it took about 3 months of seeing people
Yeah.
to get emotional buy-in and verbal commitment. So
But you'd done a lot of work to that
prior
point.
to that, I mean, it was a little different for me in terms of I only perhaps spent 7-8 weeks on the entire plan.
Mm-hmm.
But it was a plan that I'd done. I used to have to present a very similar plan at board level in the UK in my old company for every new acquisition we did.
Yeah.
So I'd already got the bones of it together, and I just had
And
to
experience.
so it would have been a lot longer process, and I wouldn't have liked to be in a situation where I was the guy with the great idea and actually no idea.
Yes.
You'd need help. You'd definitely need
I'm
help.
assuming it's in the millions.
Yes.
So would that be something that you'd go to crowdfunding now, if it was now that you're setting up the business, just as a...
I'd certainly look at it and consider how it might work.
Yeah.
It's. I think, from my point of view, I was also looking for some experience from the shareholders that
Yeah,
would
okay.
sit on the board, which they do,
Yeah.
because and well-connected people that could help
Leverage.
and add value to the business, not just the cash.
Yes.
So it was, from my point of view, I think I was better placed doing it the way
Yeah.
I did it. But yeah, I'd certainly have looked at it. I wasn't aware of it at the time. So.
As just addition to what you've said, Jamie, there, so, if you were, so for example, I'm just trying to paint a picture here. If you were to go for the crowdfunding in that scenario, now you had that in investors in the millions, you could potentially get the millions, but you'd have 100,000 investors.
Yes.
Because you've got a smaller capital
Yeah.
injection from an individual perspective.
Yeah.
What we're going to be doing at Fat Hand is then we become the interface between you and the 100,000 people, because you imagine now you're dealing with 13 people and
Yeah.
you're the interface between them, their money,
Yeah.
and the business you delivered to them.
Yeah.
Now, if you were to go to crowdfunding and have 100,000, you'd shy away from dealing
Be a
with
very long
100,000.
board meeting.
That's right. So on Fat
Should
Hand,
probably do that on a webinar or something as well.
Yes.
yes. So Fat Hand, we are looking at structuring that you just deal with us and we deal with the 100,000
Okay.
people. So it takes away that what we would call a difficulty in regards to
Yes.
relations with your investor.
Understand.
I think we've addressed the topic pretty well. Do we have any questions from the audience? I shouldn't say crowd. I was talking about crowders and crowdfunding. Anyway. No questions. We've addressed it really well then. Oh, there is a question.
Yeah, I've got a question. Novel and interesting ideas. The concept of not actually selling shares, but selling the recipe book or the book or in this meaningful task. Where do I source all these meaningful ideas that other people come up with so I can copy a good one?
A lot of YouTube.
So basically, the way I look at it is, previously, if I could call it the previous generational business, you had a lot of secrets. If you were a retailer in Perth, your client base would not be able to find out exactly where you purchase your merchandise. They wouldn't be able to work out what your margins are. So you could basically gouge, if I could use that word, and say, okay, this is how much you have to pay for these products. If you don't like it, go somewhere else. So your buyers would have very limited information to be able to make an informed decision whether your value is actually, of value, or it's too dear or too low. Now we're in an area where I could just go online and look at a suit in the city and work out exactly who else is selling it online and how much I can buy from, even from the manufacturers themselves. Free shipping is very common now online, so that secrecy has disappeared. So if you're looking at ideas, just go online.
So YouTube in a few different spots and maybe other crowdfunding sites.
Yeah, that's correct. But you have to be cognizant of the fact that I'm a big fan of the openness that you have in current day and age. But I'm equally very passionate about being able to give back or reference back to where you got the ideas or how you got that coming through, simply because that by having everything available, we should also be able to allow people to have intellectual property, because without that, I think it's a free fall, and I think that's anarchy. If everyone just copies from everyone, and then what's the incentive for someone to be able to get involved? Because as we know, business is not something that is a walk in the park. It takes blood, sweat, and a lot of tears.
We've got a patent attorney here who can elaborate on that later as well. Okay. Thank you, ladies and gentlemen. I think, do you have any questions to add or to ask the panel? We do have a question.
Yeah, just actually one, and probably Jamie, it's for you, and you mentioned that your investors became part of your board.
Yes, not all of them, but some of them.
Some of them,
Yeah.
yeah. So you found that, did you find that a useful process to help you get your idea off the ground? And how have you found that to be since it's evolved from the start?
Since it's evolved, yeah. Well, the way that we did it was that I've got 3 non-exec directors, and between them they represent the entire shareholding. So at a board level we can make decisions. So that's been quite refreshing, because we're able to take a vote and get on with things rather than having to call people, because my investors aren't all on the West Coast as well, so trying to get everybody together would have been hard work. So that works well. I think the one thing when you've got the level of investment I've got, and you therefore don't have the controlling share, you have to accept that and make peace with it, come to terms with it very early on, because it's not your business anymore. You're a shareholder, you've got an interest, but you've got people who've put their hard-earned cash into your business, and they've got a right to an opinion. And that's where things can really come unstuck. And I think if you do bring in investment, you have to accept that you're sharing your business. And so I think from that point of view, I came to peace with that quite quickly. And we've been meeting monthly now for the last 3 years. And yeah, we've got a good relationship. And like I said earlier, the board bring dynamics to the meeting that they look at things from different perspectives, which is always good to question somebody who's in the business day to day, because sometimes you can't see the wood for the trees.
That's a good point.
Yeah.
Questions? No? Thank you, Jamie. Thank you, Sue, Rajab. No, you've been a fabulous audience. Thank you.
Thank you.